What do you do if you can't pay your taxes? Do you go into debt to pay your taxes? Do you put it on a credit card that you'll just pay off over time? Do you just not pay them and take care of it later or hope it just goes away? Neither of those are good ideas. The best thing to do is to get an installment agreement or a payment plan with the IRS. And in this video, I'm going to show you exactly how to do that. So keep in mind, even if you got a tax extension, the extension is only an extension of time to file your tax return, not an extension of time to pay your taxes. Tax payments were still due April 15th. So if you know how much you owe, but you can't make that payment, here's how to set up a payment plan or an installment agreement with the IRS, reduce your penalties, and keep them off your back for just a little while. We're going to start at irs.gov. You're going to hover over where it says pay and then go to payment plan, installment agreement. All the information you need is here, but the different options are actually under what does it cost. So if you click that, it gives you your options. You obviously have the option to just pay it now, but if you could pay it now, you wouldn't be watching this video. So your other two options are a short-term payment plan or a long-term installment agreement. A short-term payment plan is just telling the IRS, hey, I can't pay you right now, but I will pay you within the next 180 days, the next 6 months. There's not going to be a payment schedule here. You can pay it in pieces or you can pay it all in full, just as long as it's all paid within 6 months. If you choose this one, there is no setup fee, but they will still charge penalties and interest until it's paid in full. Under the long-term payment plan, this is where you need longer than 6 months to pay. This is where they're going to set you up on like a monthly installment. There are setup fees. It's $22 if you set it up to have the payments automatically withdrawn from your bank account. Or if you want to pay it yourself, then there's a $69 setup fee. There's different setup fees. If you're low income, you can have the setup fee waived in certain instances. And you can find out more information about that in here. Do you qualify for a payment plan? That's up the top here. To do the longer term installment agreement, you can only owe up to $50,000, including the tax, penalties, and interest, and you have to have filed all the required tax returns. To do the short term payment plan, the one that you have within 6 months, you have to owe less than $100,000 in combined tax, penalties, and interest. And it does point out here, whenever you're setting these up, usually you're going to be a sole proprietor or an independent contractor. Even if you have an LLC, that LLC is a disregarded entity. If you're paying your taxes on your personal tax return, which most of you are, you're going to set up the payment plan as an individual, even if you have a business and even if your taxes are due because of your business activity, you're still going to sign up as an individual. The only reason that you would do this as a business is if you have a C Corp where that entity is paying its own taxes and it's not flowing through to you personally. Next section, what do you need to apply for a payment plan? You have to have an online account with the IRS. It's actually a really good idea to just have an online account with the IRS, regardless of whether or not you need a payment plan. If you have the IRS online account, then you can look up transcripts of everything that's reported to the IRS for you, like 1099s and W-2s. You can look at the status of your tax return. You can look at status of refunds, status of payments. It's always a good idea just to have this set up anyway. Now, you can set up a payment plan by calling or visiting an IRS location. I don't know if anyone's ever actually done that, but you can do it, but there may be additional fees. The cheapest way to set up a payment plan is using an IRS online account. You're going to need your bank routing and account number if you're setting up direct payments. And if you have recently filed a tax return, you're going to need that as well. So if you go to IRS online account, you'll just click sign in or create account and get started that way. Obviously can't show you that because then you'll see all my information. But once you're there, you will be able to get that account set up. You'll be able to apply for the payment plan or request a payment plan. And as long as you meet the requirements, you should see almost immediately whether or not that payment plan was accepted or approved. If you don't see anything, it might take 30 to 60 days for them to send you something in the mail. If you haven't heard anything within 30 to 60 days, then you may need to call them to find out what the status of that payment plan is. Now, just in case you're going through all of this and you're saying, you know what, I can actually just go ahead and pay this. This is way too complicated. I have the funds that I can pull from other places. How do you just pay the taxes? You go up here to pay. Easiest way is to do bank account direct pay. Now, again, if you have an online account, you can do it that way. That would actually be the easiest because you don't have to verify your identity. But you're going to go here to pay individual tax. This is if you don't have an online account. You'll click on make a payment. And then it's going to ask you what to apply this to. It's going to be 1040 income tax. And this is a reason for payment. And this is where a lot of people kind of get mixed up. If you're paying your balance due that you owe because you filed your tax return and your CPA said, or the thing said you owe this much money and you, for whatever reason, didn't have it directly drafted from your bank account when you filed the tax return, then you're going to do balance due. If you are paying next year's taxes, like you make quarterly estimated taxes, then that's going to be estimated tax. If you're making a payment with your extension, you'll do extension. If you have an amended tax return and you're making a payment with that amended tax return, this would be like if you had to make a change to a tax return you've already filed, you would use amended. And everything else on here is pretty specific, pretty rare situations. So for the most part, you're going to be using one of these top three. If you're paying the balance due for the tax return you just filed, you do balance due. If you're paying estimated taxes for next year's taxes and you're paying that in advance, you use estimated tax. And if you're paying an estimate with your extension for the current year tax return that you're filing, then you're going to do extension there. So let's say we do balance due. It's going to ask you for what year it is. So if it's 2026, we're filing our 2025 tax returns, we're paying our 2025 taxes. You'll click confirm and you click continue. And then it's going to ask you your tax year for verification. So what they're trying to do is they're trying to make sure that you are you. Now, I don't know why it matters so much. If somebody else wants to pay my taxes, please let them do it. But whatever, they want to verify that you are who you say you are. So you're going to tell them what tax year are you using to verify your information. Because what they're saying is, hey, we have the 2024 or 2023 or earlier tax return, and we just want to make sure that you know what was filed on that tax return. Because if you know that information, then we can be reasonably sure that you are who you say you are. So let's say we did our 2024 taxes last year. You can put whatever information here, even if it's different from what you're filing currently on your 2025 tax return. So you look back on your 2024 tax return, you see, how did I file? Did I do single, married filing joint, whatever? You'll put your first name, you'll put your last name, you'll confirm your last name, so you'll do it again. You'll put your social security number, you'll do it again. You'll put your date of birth. This is not my date of birth. You'll put your address. Oops. Let's say Anytown, Utah, 1, 2, 3, 4, 5. You'll click this and then you'll click continue. And if it's wrong, if it's wrong, then it's going to tell you that doesn't match what we have. If it's right, then obviously it'll say it's correct and you better move forward to the next step all the way through getting your taxes paid. Really important at the end of this process, you're going to get a confirmation or some sort of payment confirmation. Make sure to print that or save it as a PDF so that you have it for your records, just in case the IRS ever comes back and says, we didn't receive payment or we didn't receive it on time. And so we're giving you a late payment notice or a late payment penalty. You'll actually have that proof that you paid it whenever you were supposed to pay it. And so that's actually a good point to make right now for anything you do with the IRS. Anytime you mail them something, anytime you pay something, you want to keep records of that. It's actually why it's good to pay things electronically online rather than mailing a check to the IRS, because it's hard to prove you mailed a check. You can send something certified, you could take a picture of it, but how can you prove that you actually put it in the mail and sent it to them and sent it on that date? So doing things online, you have that data, you can screen print, screenshot, print to PDF, whatever, the confirmation that shows the date, and you can prove when something came out of your bank account or when you actually filed something with the IRS. So always, always, always keep proof of everything you do with the IRS, because they do not have good systems apparently for tracking certain things, and they are known for just sending notices for things that you've already done. So make sure that you have that. And if you get a notice from the IRS, don't assume that they're right immediately, but do look into it, call the phone number, whatever. So definitely keep all your records. So if you have the money, it's best just to pay your taxes when they're due rather than going into debt over it. But if you don't have the money to pay your taxes, definitely don't put it on a credit card that you're not going to pay off. The interest rates are just way too high on that. Set up an IRS payment plan. Even though they're going to charge you penalties and interest, those penalties are less than they would have been if you didn't set up the payment plan. Plus, if you have an approved payment plan with the IRS or installment agreement, then they're not going to send you all kinds of notices because you haven't paid your taxes. They know that you're not paying it in full just yet, and they've approved that. And if you find yourself in this situation where you can't pay your taxes, then you need Profit First in your life. Profit First is a system for setting aside money throughout the year so that you have everything you need at the end of the year. If you want a sneak peek into that system to see what it's like, I'm going to put a link in the description where you can get the first 2 chapters of the book Profit First by Mike Michalowicz, the guy who invented the Profit First system. So check that out. And if you have questions about how to get that set up, let me know and we can help you out with that. I hope this was helpful, and I will see you next time.